Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are on 12th May between 5 and 5:30 GMT. I will explain to you the Asian sessional live market analysis, the expected market moves, and also the derived forecast for this particular week, and also the levels in which the currencies could trade. Now, first of all, let me explain to you the derived forecast for this particular week with the help of the next slide. Okay, this is the second week. So the market is expected to make brief volatile move and then start making the downward trending move. Already in last week, we have seen that they started the trending move on the downside. So probably if you could recollect, last Thursday when I was reviewing the forecast, what I gave it on last Monday, I explained to you that during the European session, at the time of BOE and ECB interest rate decisions and also the ECB press conference, the players are expected to make an extended upward stop and then continue to make the slide. So during that of the trend reversals, they always make such extended stop ends. Either they are known to make, in the case of GBP, the extended stop end, or in the case of Euro, depending upon the traders holding positions. So exactly on last Thursday, they made a very quick extended stop end during that of the ECB press conference. And in a matter of about 10-15 minutes, they just dropped all the way as if the world has come to an end, and then continue to make the drop during that of the US session. So when we saw in the previous week on 2nd of May, that is when non-farm payroll was expected. So they made a very quick downward move for a phenomenally good non-farm payroll number, and then subsequently reversed and gained. Then I gave the posting in fxtrade.net that because of the BOE and ECB interest rate decisions that follows the next week, the players wanted to make use of the time to build sell positions. So they made exactly on 2nd of May, that is 12:30 to 14 GMT, they just made one quick downward move and consolidated near the low and started gaining the levels all the way. A brief extended stop end on the downside before making a massive upward stop end. So if you look into the chart, it is a 30 minutes chart, but still it is not showing the level of 1.3992 or 94, which is shown as a high on Thursday. Anyhow, so what they have done, after gaining the levels, they build this, holding the market and build the sell positions around that of 1.39 area, and then subsequently formed up soon after the ECB press conference, and then made one quick upward move almost closer to the 1.40 and dropped it, and then continued to make that drop. And you find that they've gone below that of 1.38, a typical extended stop end wherein they just start around that of the low set for the day. They make a small dip and come closer to that of the low set for the day, and then quickly breach the high and go above in a matter of about 30 minutes, sometimes about 1 hour or 1.5 hours. They try to reverse the market and breach the low and continue to go below. And afterwards, you don't come across much of a pullback and then continue to make the drop in the market. So this is what you find now. Currently, they are holding around 1.3762. So all the way from 1.3992, they dropped it. Any level, anybody wanted to take a buy, thinking that, okay, the market is likely to reverse, etc. They did not do it. Their intention is very clear. They just briefly made a downward move, for non-farm payroll and reversed, and people thought that non-farm payroll was discounted. And afterwards, the ECB and BOE announcement, you find that they started making the drop. So what we need to understand is that the data release, they can give any sort of interpretations, either in favor of them or against it, or simply say that the data is already built in the price, or it is discounted, or it is not relevant at the moment, or there is some other crisis which is more prominent than this, and they can give any sort of interpretations. So that is why I emphasize that you look into that of the data release time and don't go in for an in-depth study of the data, because the in-depth study of the data does not help us at all. And you know that they created the feel as if euro can go to heaven, and subsequently they made the drop. So they always create the market sentiment and act against it of the traders. So this is what we need to understand. I just showed the chart because on 2nd of May, they just made one extended downward move and reversed it. And on 8th of May, they made an extended upward move and reversed it. Exactly the same time, 12:30 to 14 GMT, they did it. And then reversed it, which is on the downside, and this one on the upside. And so when I was giving last Monday that they wanted to make the high level consolidation and make upward stopping before making a drop from that of the Thursday, 8th of May, they just build huge sell positions here. Now they are happily dropping the market and continue to make the drop. And what will happen? The traders think that, okay, still the market is bullish. Euro has got a scope to go to 1.40 and then try to take a buy position, but the players will show the other way market. So this is what ultimately we need to understand. So this week, they're expected to make the swing and slide moves on Monday and Tuesday. I mean, that is Japanese and the European session of today, and then firm up for the US session as the week beginning false move. So always on the trending time, they make the week beginning false move and then start making a dip and firm up to confuse the traders and start making the slide. So you know that on Friday, how they had done the slide without a pullback, and the same way, they will try to continue to make the slide on Tuesday. Then Wednesday, will come across more drop. And then they could quickly firm up, and that will give the impression to the traders that the market is reversed. And then they will try to go in for a breakout trade. Then afterwards, they will swing and drop, slide, and then drop. So keep in mind that the players are cunning. So if you are be friendly with a cunning person, how alert you will be. So you have to assume it that way and see that, okay, market is not friendly, and the people who are in the market, they are cunning, and they manipulate the market in such a way that they give us the impression to believe and then breach the confidence, and they simply make the opposite move. So that if you could understand, then you will never get moved with it of the sentiment created by various sources through media. And also you'll be able to understand, okay, we have to be cautious, and the players are cunning, and always we have to be alert and protect our equity. Then on Friday, they are expected to make the swing and slide and then drop, and then finally make one more drop. And then everybody will go in for a breakout trade on Friday, but they will firm up and buy against their all sells, because they cannot continue to allow the market to drop. In that case, no, the sell and buy traders will start making the profit. So they will give that impression to the other traders that you can do sell and buy trade, and finally they will trap it. And if you carefully watch in the market on a weekly basis, if the market is expected to be bullish, then on Friday, there will be profit booking move. And if the market is bearish, on Friday, the market will go in for a short covering. So you watch it, then you will be able to understand what is the overall trend in the market rather than looking into the chart or looking into the various comments, etc. Because ultimately, if you understand the market by yourself, then you will find that you are able to get rid of the market fear and nobody can cheat you. And if you simply follow the charts or the technicals or the fundamentals, then people can continue to cheat you. But if you read the hidden agenda of the players, then you know that you always keep in mind they are cunning and they can just pull the rug at any time. So if you are aware of it, then you will become doubly cautious and you will use either stop if the hedging order facility is not available or use the hedge order to limit the risk. Thereby, you find that you are able to protect your equity. Ultimately, what is more important, the whole exercise here by that of the players is, okay, they are cunning. What is that they gain out of being cunning? So they have to give that impression to that of the traders that the market moves in tandem with that of the fundamentals, and the technicals also give us the indication there will be pullback, Fibonacci retracement, etc. They pretend as if the market is moving in line with that of the expectations, and suddenly they reverse, and then the traders become surprised and they say that, okay, it's because of the speech. And so when BOE announcement was there, and if they just pick up a few words and pick up a sentence for that matter, or when ECB chairman is giving a speech, they will pick up one sentence and simply highlight it for 10 times, then you will think that there is a big agenda behind that particular sentence, as if everything is being revealed using that one particular sentence. And then everybody will say that, okay, that chairman is the person who has spoiled the entire market. But actually, he would have made an innocent statement of that and nobody bothers about it. And you know pretty well that he is bound to be on criticism from time to time. And also they get benefit out of that. Okay. Now, finally, you find that the market makes the move against that of the expectations of the traders. So when such moves are made, you have to be careful and watch what the players are doing at that time. Okay, they gained the levels after making a quick downward move when the non-farm payroll was very good. And then subsequently they gained, and there was a surprise. And they said that Ukraine problem, because of that the market has gone up. Okay, fine. Then subsequently they went up again. And as the week proceeded, they went up again. And then finally, on Thursday, last Thursday, when everybody was thinking that, okay, because even for non-farm payroll, such a good number, market has not dropped. So as soon as the BOE or ECB press conference is over, the market has to flare up. But they picked up a sentence and said that there is a culprit and then started making the drop. Okay, fine. The sentence can have a drop of 50 pips or 100 pips. But why they should continue to drop endlessly? From that 1.39, almost 1.40 to 1.3750, about 250 pips. Whereas such a big number of non-farm payroll, which has shown only about 65 pips drop in the case of euro. Whereas one sentence is made, which is nothing but a sentence, which is not actual data, but which has made the market to drop 250 pips. So if you understand that there is no quantification with regard to the number of pips which has to drop or it has to rise, and even if you take the average for non-farm payroll, okay, every time the non-farm payroll is announced, the market reacts about 80 pips, 70 pips, 60 pips. Okay, we'll go in for an average of 65 pips. So that is not at all relevant, because every time they can make the move in such a way to hit the stops. If the stops are very close by, they will make only 30 pip drop. The stops are of about 90 pips, and if they find the cluster of stops are there, and when they hit, they'll be able to really make the profit, huge profit before making a rise, then they will go up to 90 pips. So it is not the intensity of the data, it is the information, what they gather, that where the cluster of stops are there. Similarly, why they should gain about 70 to 90 pips during the ECB press conference, because they found a lot of stops around below that of 1.40. Why they are not gone above that? Because if they go above, then those who have got the long position will quickly book profit. When they go up to 1.3990 and hold it, those who have got the long position will think that, okay, let it go to 1.40 out of greed. They wanted to book profit after crossing 1.40, because many of the occasions they have seen that it goes close to that of the psychological number, 1.35 or 1.37, 1.39, like that. And once it breaches 1.40, then we will know what is the momentum. Then subsequently we will book profit. So those who are holding the long positions from these days, they fail to book profit. What happens? Out of greed, they fail to book profit. Then they show the other way, the market. So normally in a bullish market, not all the buy and sell traders make money. Similarly, not in a bearish market, all the sell and buy traders make money. So on Friday, if you do sell and buy trade, they will trap you. With regard to the levels in which the currencies could make the moves, the high could be 1.3825. They could show intraday high as a stop end, and then they are expected to continue to make the drop in the case of euro. And this is all the actual level, but in the quote page, it shows still the Thursday level, 1.3994. Still, it has not been altered. But we can take it from the platform. And in the case of GBP, 1.6841, they showed it as a low, and the high is 1.6861, and they can go up to 75 and then started making the drop. And in the case of yen, 101.75 could be the low. They already set the low and they are expected to go up. And Friday when euro and JPP are dropping, and the denominator currency is USD CHF was gaining, and USD CAD was making a gain quickly after the data release around 12:30 GMT. And USD yen was the only one currency which was holding, because when euro and JPP were dropping, they held USD yen so that yen crosses will also make the drop. Then they will try to gain the levels in the case of USD yen later on. Then CHF also gained the levels, and they are expected to make further gains. And in the case of Canadian dollar, they showed their low as 1.0816 on Friday, and suddenly made about 100 pips rise. That is how they trap the traders, and they continue to dip every day 25 pips and give that impression every day USD CAD is going to drop. That's what they do it in the denominator currencies. In the case of CHF also, when it was dropping, they just make only 25 pips more. So if you buy, you'll not be able to book profit, but you don't feel like cutting the position. The next day, another 25. Next day, another 25 pips. That is how they just show you a huge loss when you continue to hold. And then finally, they just reversed on Friday, Canadian dollar, and they are expected to take it up to 1.1 area. Slowly, they are expected to gain the levels after brief lower level consolidation here at 1.09. In Australian dollar, and when euro and GBP are dropping last Friday, and Australian dollar was the one which is holding, because they wanted to hold Australian dollar, drop euro and GBP. You know that what will happen. All Aussie crosses, euro Aussie and GBP Aussie, they are expected to make the reversal move. And that is why the commodity crosses, they handled on Friday. And you could come across that this time, this week, they are expected to make more moves in the case of the commodity pairs. And afterwards, you will come across the continued downward move in the case of Euro and GBP. Coming to that of the market reading. So Euro formed the low at 1.3946, sorry, 1.37 62 64. So I did it wrongly. Okay. So Euro formed the low 1.3746 and then subsequently went up to 1.3764, still holding in the range. 1.3994 is wrongly displayed here. And in the case of GBP, everywhere I entered wrongly, 38.45 is the low and 62 is the high. So they are not breached the low or the high. And in the case of yen also, 101.81 is the low, 102.05 is the high. They are not breached. And in the case of Canadian CHF, 88.62, 88.78 is the low and the high. Then Canadian dollar, 1.0893 was the low. They just cut the low by 2 pips. And the high is intact. So they are making a brief downward stop and making a contrarian move of negative net change in the case of USD CAD and also Australian dollar. Positive net change in the case of all the 4 majors. So it's a contrarian move. They are doing it in order to handle the commodity process. And then they are expected to make a brief downward stop and probably 1 or 2 pips if needed. And then continue to gain the levels above that of 1.0904 in the case of Canadian dollar. And in the case of Australian dollar, 93.49 is the low, 93.68 is the high. They are not breached the low or the high. And they are expected to make the sideways move today and make the firming up during the US session as a week beginning false move. And then subsequently, they are expected to make the slide from tomorrow. So during the week beginning false move, the best way to handle is don't go in for a buy and sell trade. Instead, wait for the market to consolidate and just let them make a small firming up. Then let European session take a sell position. Tomorrow, Japanese session itself will start seeing the profit. Try to understand the moves and don't try to act against the tide. Then let them make the moves. Afterwards, you enter into the market. So normally to enter, we do it as watch the market up to 3:30 GMT. And if the currency is near the high, we'll try to take a sell position and keep 30 pips hedge order. And if the currency started making the slide, we'll keep off. And the position shows 25 pips profit. We keep stop at entry and reduce the risk to nil. Then keep about 45 pips or 75 pips limit order. The momentum is good. Then we will try to maximize the profit to 75 pips or 100 pips. The momentum is very less when they are not breached the low or the high. Aim for only 30, 45 pips profit. So that way, if you try to do the trade using the hedging order, then you will be always taking care of the risk. So you'll have enough time to handle the position if you use the hedging. Now, this is the market timing. So if you are not familiar, then you can just note down. The webinar is being recorded and you can also later on look into that. So they always handle 2 pairs at a given time. And early in the late sessions, they handle the majors. Mid sessions, they handle the crosses. And gap time, they make the false move. And normally during the US, European and US session, they make the intentional or the extended move. During the trend reversal, they make extended stop, and that is what they had done it on Thursday. So My next webinar will be on 15th May. At the time, I'll come and review the forecast, what I've given it, and try to see whether the market is moving in tandem with the expectations. And if those who attend on Monday webinar, if you come back on Thursday, you'll be able to get the forecast for Thursday and Friday, the fine-tuned market reading and the forecast. So those who attended last Thursday would have got real benefit, because I was explaining to them that they will make one extended upward stop and take sell positions. Once they stop cutting the new high for 30 minutes, then you'll be able to see a big drop coming in. And many people have thanked me, those who attended through email, chat, etc. And they made a huge killing profit that time. So I am here to help only, not expecting anybody to become a subscribed member, etc. So if you want to really make use of this opportunity, kindly attend the Thursday webinar also. Because this time we'll come across more and more of trending move on the downside. Then little good, huge volume on the daily on USD CHF and USD CAD. Say, as far as the volume is concerned, I'm not very sure how you are able to get the volume information, but the way in which they make the move, it may appear that it is due to lack of volume or due to sudden increase in volume, etc. And actually, you'll be able to see from the live market code page, and if the spread becomes more than 40 pips, then you'll come across automatically the momentum starts. Till such time, they are not handling the currency. That is what it refers to. So the volume they bring in to start with and induce the traders to enter into that. Ultimately, many of the traders look into the various charts and find that, okay, now GBP Aussie is a good currency to enter, or Euro Yen is a good currency to enter. How they take a decision like that? Because when the spread increases, so what the players do is they increase the spread in two currencies at a given time, and the two majors, or a major and a commodity pair. By that, the corresponding crosses of that particular major as well as the crosses show big moves. And immediately the traders find that it is attractive and they try to enter into that without understanding what the players intend to do. Always we have to keep in mind that their first move will be a false move. In any currency, the first move will be a false move, and they will pretend as if euro is going to drop and then rise. They will pretend as if GBP is going to rise and then drop. So that false move, pretension, will be always a quick move. And if you could recognize, then you can make a killing from that of the market. Then judge gold. Gold is also expected to make a nominal slide to start with. Then Eric. Aussie USD expected to low 89.50 to occur before 16th May. May or may not. But they are expected to make the slide in the case of Aussie either this week or next week. Because, see, normally to gain the levels, they take a long time. I've been telling from April that they will be making an unassuming slide in the market. Instead of April second week, they had done it during that of the May second week. They took one more month to build huge sell positions because of the lack of volume from that of the traders. So it is not that players can build huge sell position. How they can build a sell position unless and otherwise somebody buys from them. So they have to create the bullish feel and induce the traders to turn long and take the buy positions. Only then, if the players drop the market, the traders taken the long position will come for stopping out or just liquidating the long positions, etc. Always keep in mind that they will try to test the patience to the greatest extent. And if we lose patience and turn long at that time, the highest level, then we will be the biggest loser. There is always a saying in the market, when the strongest bear turns bullish, the market reverses. That is what happened. They took it up to 1.39 and everybody started telling the market is going to be bullish and they started making the drop. Then little quote man, GBP Australian dollar is erratic because as I told you that they are handling the commodity crosses now. See, simply telling erratic. Why? Because when it is not in line with that of your expectations, then immediately we use the word erratic. Understand that the players are not here to give us the clear picture all the time. Whatever the statistics we try to use it or the chart pattern we use, there is no need that we should get a clarity out of that because the players make the moves in such a way that we get confused or we get attracted to take a buy when they show that higher high, then immediately you think that, okay, market is in the uptrend. When you connect the channel, it shows that it is going upward. You take a buy. Then later on, you find you are the person who bought it at the highest level afterwards the market drops. Then we will immediately say that market is erratic. So whenever there is a disappointment or whenever the market moves against your expectations, we use the word erratic. How can the market be erratic? We have only become erratic in understanding the market. Market is making moves for a huge number of people, not for us alone. Because you happen to see GBP Australian dollar, it looks erratic. For me, euro looks erratic. For another person, GBP looks erratic. Ultimately, what? Because when they show the contrarian move, and you will not be able to really understand whether it is making a bullish move or a bearish move, then it looks erratic. But actually, it's nothing but a contrarian move. A typical contrarian move, they make it. So please understand the way in which they make the moves in the market rather than you expect the market to be understood with the help of the conventional analysis. So if you go with that of the conventional analysis, market will appear that it follows conventional analysis. And suddenly it might become erratic. Then everybody will say that, okay, risk reward, keep the stops. And if you even keep a stop of 90 pips and aiming about 270 pips profit, you will see that first your stop is hit. Afterwards, the market moves 270 pips. So the players are here to know where the cluster of stops are and try to make the hit. There is no point in making a technical study and keep the stop. So ultimately, you have to avoid keeping stop. If you want to avoid keeping stop, use the hedge order. And in case if they try to hit the stops, you book small profit in the hedge order and keep another hedge order. And when they make the move in line with their expectation, book profit in the original position. So you need to outsmart the players. There is no other goal. Then little looks like it is about to take off downward. Already they have started making the downward move and only then it will become an unassuming downward move. They will hold it. And last Monday, they have been holding it all along. And Tuesday and Wednesday, they gained the levels. Last week, Tuesday and Wednesday gained the levels. And on Thursday, last 8th of May, they made one extended upward move and then reversed. So today, being the first day of the week, always they make the week beginning false move, create the feel that market is going to reverse. And they already started showing the positive net change. They gain about 15 to 20 pips. So you think that, okay, still it is a good buy opportunity because it has gained only about 2-3 pips or 10 pips. So we'll take a buy and wait. Then they start making the slide. They don't give profit booking opportunity. That is how they trap the traders. So if you don't get the profit booking opportunity in 2 hours after taking the position, understand you are trapped. Then INI. What is your expectations of GBBN? See, USD yen is expected to gain the levels and GBP is expected to drop. As a result, you will find subdued moves could happen in the case of GBP yen. Either way, moves will happen there, but not a big upward move or a downward move. Then little movement. Do you think that USD CAD is going to yes, you can long and during a small dip near that of the low, and it is expected to go up. And Richard, you could advise on the outlook of Australian dollar for this week. Will it likely to drop? Yes, it will drop below that of 0.93. Then little movement. I believe GBBUSD will hit 1.69, then drop. May not, sir. My estimate says that after the extended stop and they normally continue to make the slide to the opposite move. Because they follow a specific pattern and they don't disobey that, and they always try to follow it. Only thing is we need to understand their language. If we understand their language, and there is no secret, we will be able to understand everything. But as long as you don't try to understand the language and we try to use various methods to find out what they are trying to communicate or what they are trying to do in the market. So best thing is learn their language. That is what I'm trying to tell you. Follow their timings, follow their type of moves, and follow their intentional reading. Always keep in mind that they are cunning. You will be alert all the time. You will not be moved with that of the market. Okay. GBBUSD closed below the 1.27 extension. 1.272. I mean GBBUSD? I think you are talking about something else, I suppose. In Grigor. New Zealand, similar to Australian dollar, are stronger. See, New Zealand dollar and Australian dollar, you know that they are related currencies of the same region. So they try to make the moves in Aussie New Zealand dollar cross and also New Zealand dollar Aussie. If you look into that, find out the net change. In Aussie, net change is 1 pip and New Zealand dollar is showing 14 pips positive net change. So obviously, New Zealand dollar is the denominator, Aussie is a numerator. When the denominator becomes stronger, then you find the numerator is become weaker. You find the particular ratio goes up. I have that here. Okay. So Aussie, New Zealand dollar. So New Zealand dollar is stronger against US dollar and Australian dollar is slightly weaker. So when Australian dollar is weaker, the numerator is weaker and the denominator is stronger. So when the numerator denominator, which is actually a numerator here, against that of US dollar. So when both are numerator currencies, when the denominator becomes stronger, then the index comes down. So that is how they make the moves in the market. So they only make the moves only in the case of the majors. They don't make any specific moves in the case of crosses. They make only big moves in the case of majors. And since they handle only two currencies at a given time, you find suddenly some crosses showing some activities. Sorry, I will not be able to open the chart at the moment because it's already time up. So probably you ask me a private question and through comment on Euro GBP crossings. Euro GBP is expected to make the slide, some more slide below that of 0.8175. Okay, 81. So they are expected to come down. This time around, it will go to 81 area and then swing. Then slowly come down to 80 area and then swing. That is how they are expected to make the moves. And because when you find that a GBP is not making that much drop when compared to Euro, as long as that scenario remains, that Euro GBP cross is expected to make further downward move. So don't relate it to that of the earlier lows and try to pick up. Always the players make the extended stop and then reverse the market. Keep it in mind. So if earlier low is going to be well supported and immediately enter into the market, the players are fools and they don't know that how you are thinking about the market. And they are here to trap the traders and earn their money. So if you keep all those in mind, then you will not follow such things, open secrets. Okay, so I take this opportunity to thank FX Street and also you people who have come here to listen to this webinar. I'll come back on 15th of May, Thursday, and try to recollect the forecast, what I have given it, and try to explain to you what could be the further moves in the market on 15th and 16th. So thank you one and all. See you on Monday. So see you on Thursday.